For all of the young adults and new families out there, I bet you're at the stage where you'd like a new home. I mean, in this day and age where everything is accessible, it should be easier to find a home you like, right? Well, not exactly. The housing market has been going through a really rough patch this 2022 for a lot of different reasons. So in this video, I'll be going through each one of them to try and explain what exactly is going on. First, let me give you some context on the history of this whole issue. The fall of the housing market recently has been buzzing over the internet for good reason. It's gotten so bad that early 2022 has become the biggest 3-month rate spike since 1994. That's almost 30 years ago. But for all of you young ones out there, you might not have heard about what happened in 1994. Some people consider it one of the biggest and fastest spikes in mortgage rates. Sure, some older adults can count the one in early 1980, but that was mainly just a once-in-a-lifetime fluke, so we won't really be getting into that. The 1994 one has more similarities to what the market is experiencing now than the 1981. But going back, the race between who did worse during the first few months of 1994 and 2022 is almost neck and neck. Mortgage rates back in 1994 spiked in the blink of an eye over only 3 months from 1993. People weren't able to buy houses because the rates were so high, leaving a lot of people homeless for some time. The drawback, though, of the comparison is that our daily rate data only goes back to the middle of 2009. So we can't really compare much because we don't have enough data. But we can still look at 2013 as an important year for bad mortgage rates. The rates were worse over 8 weeks compared to 2022, which has been over only 7 weeks as of now. If this continues, 1994's record will be broken, and 2022 could be the worst year for mortgage rates. So what's going on now in the present? Well, just this February, according to the Mortgage Bankers Association, the common monthly payment for a new mortgage application in America jumped more than 8% in just 1 month. 8 might not seem like a big number, but in real estate and housing, this is a huge deal. Unfortunately, it doesn't stop there. Just a few weeks ago, mortgage rates rose again, and according to Freddie Mac, a mortgage loan company, the 30-year fixed-rate mortgage went up again in just over a week. Sam Cater, Freddie Mac's chief economist, even said that mortgage rates have gone up by 1.5 points over the last 3 months alone. So you have a lot of aspiring homeowners up in arms and scratching their heads over buying houses. But why exactly is this a bad thing? First off, in normal times, rising mortgage rates are supposed to help cool housing prices. That means the market has time to recover its prices and have houses that can sell for reasonable amounts. But looking at the situation now, it's possible that the mortgage can increase, making it more expensive to buy a home. What's worse is that there's little evidence that the market is calming down. Just in the past month alone, the share of for-sale homes accepting an offer in under a week just reached a new record. Plus, list prices for houses over this past week are still raising the bar and setting new records. If we go back again a bit, it's been 40 years since rates have risen this high. Some experts say it even goes hand in hand with home price growth and high inflation. And just around April, America was undergoing a severe housing shortage. If you pair that with the new need to work from home, then you've got yourself a real problem. I mean, thanks to this pandemic, people are finding new ways to live, and owning a home is probably at the top of that list. Interestingly enough, there are multiple housing industry experts that argue it's a good thing for the piping hot US housing market. After almost 2 years of an extremely expensive, extremely fast-paced market, the higher mortgage rates are just what the market needs to slow things down. We could probably expect these higher rates to slow down demand and balance home prices. So let's talk about 2 things that higher mortgage rates do to help the housing market. Firstly, it's obvious that mortgage rates impact the housing market in almost every way. Since they change alongside interest rates set by the Federal Reserve, raising them can actually tame inflation. We could expect the higher mortgage interest rates to slow housing price growth. What did I tell you, right? I could probably be a housing market analyst at this point. And even if home prices might not completely decrease, it's definitely a breath of fresh air for buyers after what they had to go through in the past year. It's a good idea for sellers to bounce their prices and attract more stable buyers. Aside from slowing down price growth, higher mortgage rates impact the housing market by slowing the pace by which homes are sold. This means a lot more homes stay on the market longer. When buyers decide not to buy a house off of the market anymore since they're turned off by the higher rates, it cools the demand and pushes for fewer competitive bids. Surprisingly enough, all cash offers on homes selling for more than $1 million have become common in some markets. Secondly, higher mortgage rates mean a more balanced housing market. Higher mortgage rates will force some people, especially first-time home buyers, to pull out of the housing market entirely for a long while. But generally speaking, higher rates will restore balance to a very difficult-to-maintain housing market with thin inventory and increasing prices. Now that we know a bit of history and context for the present times, I'd love to hear your thoughts so far. Do you agree with what the experts said about rising mortgage rates? Maybe there are a few things from the history that we left out that you know of. Leave a like and comment down below what you think. Now, let's get on with the future of mortgage rates. Thanks to our short history lesson, I can make a few predictions about the future of the housing market. One is that rising rates can also make rental inflation even worse. People looking for houses nowadays are finding themselves with more expensive houses that they might not even own. Unfortunately, things like these push more people out of the buyer market and into the rental market, increasing demand there. In a weird vicious cycle, these rising rents will continue to put pressure on people who can afford to buy instead and make their lives harder with higher interest rates. That being said, higher rates won't create more supply. If anything, rising rates across the economy will only increase borrowing costs for home builders and add more to their plate alongside an already large serving of pandemic-related problems. So then, what exactly are some of the biggest causes of this housing market crash? Simply put, I can blame a few things like increased rates, housing inventory, supply shortages, and even labor shortages. Thanks to the pandemic and a few more pressing problems, people are going in and out of jobs and are pretty unstable to say the least. Actually, early on in the pandemic, falling mortgage rates enabled rising home prices. People found it difficult to pay these monthly mortgage payments, so the housing market was down for a while, for a large portion of 2020. But if both mortgage and home prices rise, then monthly payments can escalate quickly, like in Sunbelt and Mountain West states, for example. Aside from that, rates and home prices could also be going up because of today's high inflation. Rents are now soaring too. That means that there isn't really any good option other than having to actually buy a home. And during high inflation, buying a home is actually a good way to protect yourself from those scary rising rents. Now, if you're interested in buying a house right now, there are a few do's and don'ts that I highly recommend. One is going all out in bidding for housing that's short in supply now before it gets worse. There's actually some logic to that. Now that the increase in the cost of financing a home is spreading like wildfire, the housing market might soon be reaching a tipping point where demand will have to pull back. One piece of good news is that some homeowners might finally put their homes up for sale. It's not a bad thing at all to want a house at this moment in time, but you might experience difficulty in buying one. If you do really want a house though, I recommend that you stick to your original plan and get a house as soon as you can. The quicker, the better, because with what's happening right now, it doesn't look like the housing prices are going to get better anytime soon. If you found this video helpful, make sure to like and comment down below. Thanks for watching, and if you want to learn a few more tips and tricks to handling your money or your money-making skills, make sure to subscribe. We'll see you in the next video. Cheers!